So Giulia, thank you so much for joining me today at PPIF Europe.
Thank you.
Can you tell me about the opportunities within infrastructure? So yesterday, the asset managers panel voted that to be one of the most exciting asset classes. So I'd like to know more about that, please.
Of course. So the asset class, the infrastructure asset class itself is evolving. It's evolving in its definition. When I started in this sector, infrastructure assets used to be core transportation, utilities, power generation, and pretty much it. Obviously, the definition of infrastructure has evolved. We see a huge level of investments needed when you think about major trends like energy transition, digitalization, and most of assets falling within this space. They have a sort of hard asset component, which obviously falls very well within the infrastructure space. Yesterday on a panel we were discussing whether AI infrastructure will become an asset class on its own. So I think there's a lot happening. I think what really keeps it interesting is the huge pipeline and the diversity that we'll see in the sector going forward.
So again, based on just on conversations I've been having, people are much more interested in investment grade investments now. But what role does non-investment grade play in portfolios now?
Yeah, of course. So traditionally, institutional lenders are obviously very much focused on investment grade credits. I think the more lenders became familiar with the asset class, the search for yields, and also new pool of capital accessing the private market. Again, we were discussing earlier on a panel around private wealth, retail accessing and seeking access to this market. So the more new players enter the market, I think the higher the interest will be for potentially tapping into the sub-IG space.
That's so interesting. And there's so much stuff happening around infrastructure already. So there must be more stuff happening in the sub category as well.
Yeah, for sure. I think that will be again, and when you think about new technologies, fantastic technologies, maybe a component of renewal risk, obsolescence risk, which is very much pointing to sub-IG, but potentially as, again, the market become more familiar with some of these topics, there's potentially a path back to IG. So it's going to be an evolving definition as well.
Makes sense. So just as more private credit opportunities open up to more investors, more types of investors as well, how do you see the opportunities react to that? How do you see the competition? How would you qualify them?
I think, the opportunities will grow. I think the product will evolve. It's definitely a competitive market. And the market is still a little bit dislocated, as in there's a huge liquidity for high-profile transactions, and then there are maybe more niche transactions or sectors which are a little bit more difficult that remain, a little bit subdued. So I think it creates opportunities, particularly for specialized asset managers, or potentially even for those players that can really deploy like multi-billions tickets. So again, it's just I think a market that will keep growing, will keep evolving, and lenders will have to find ways to adapt.
And that's a really positive outlook for the future.
Yeah, absolutely.
Giulia, thank you so much for joining me today.
Thanks.